Hello and welcome everyone to this class, Getting Started with Technical Analysis. My name is Rachel Deschelle. I am a Senior Manager of Trading Services and your host today for this show. We're going to be talking everything Fibonacci's, show you the ins and outs of what they are, how they're used, and how to place trades around those Fibonacci retracement levels. I am joined in the chat today by Cameron May. Please chat in your questions, comments, requests during today's session. I will be sure to keep an eye on the chat all throughout this next 45 minutes. And please give Cameron May and I a follow on X. We post lots of charts, updates, all the things. He is Cameron May CS. I am Rachel CS. Please like this video as well, and please subscribe to us on the Trader Talk Schwab coaching channel on YouTube. So before we get started today, let's start with the important disclosures here that the information that we're going to cover today is for general informational purposes only, should not be considered any type of recommendation or advice. We are going to use the Paper Money platform. That is going to be a little bit different than the live trading, so keep an eye out for the differences between the two, as well as just knowing that options are not suitable for all investors. You have to have certain requirements to trade those as well. Now, getting to kind of this series overview that a lot of our coaches have been working through as far as these lessons. Today, we're covering a bonus lesson with the Fibonacci retracements tool. So I am excited to really dive into the charts and cover those with you today. So let me pull up Thinkorswim here, and we can look at the S&P 500. We'll kind of start just with this little market overview that we're seeing now. I'm sure you've seen this in about every webcast today, but we are brushing really close to those new all-time highs. We are actually, if we kind of change this to a line chart where we say the close is the most important, we actually are making a new high on a possible closing basis today. Look for where it closes at, but it has looked like it's broken out above this ascending triangle type pattern right ahead of this possible Santa Claus rally, which really starts, the time frame really starts tomorrow and ends during that period of after the first two trading days of the year. So I think a lot of traders will keep their eyes out, especially since we're seeing the VIX get to some of the lowest, actually the lowest level that we are seeing this year as well. So that gives a lot of setups, a lot of eyes on the street to see what the trend is going to do next. But we are here to talk about Fibonacci's today. So enough of market overview. Let's talk about the Fibonacci sequence. So where does the name come from, Fibonacci? So little history lesson, Leonardo Bonacci, he was actually an Italian mathematician. He is known as Fibonacci because he was the one that actually brought forth this idea of these ratios, or the Fibonacci sequence in this sense. And so what is the Fibonacci sequence? It's really this sequence of numbers that's really found everywhere. It's found in humans. Like, you could take your hand, and the length of your hand and the bones in your fingers are actually a Fibonacci sequence. It's found in art. It's found in hurricanes. It's found in the petals of flowers. You'll typically even see flowers be either 3, 5, 8, so like 13 petals, which is what we're going to get into, that Fibonacci sequence. You'll see it in architecture as well, and of course, you see it in markets. So let's talk about what the Fibonacci sequence is and how it kind of gets into those retracement levels that traders are going to use in the market and how we're going to draw those. So let me just pull up my marker here on the screen. And the Fibonacci sequence is essentially this. So if you take a 0 and a 1, so you're going to start this sequence with the number 0, go to 1. If you add the two together, if you add the two together, it's going to give you 1. Now, if you add these two numbers together, 1 and 1, you get the number 2. If you add these last two numbers together, you get 3. If you add these two numbers together, you get 5. You can kind of see where I'm going with this, can't you? So what would be the next Fibonacci number in this case? So you just add these last two together, 8. then you get 13, then you get, 21, 34. So essentially what this sequence is if you're starting with 0 and just counting upward and adding those two previous numbers, the existing number and the previous number that you see, it's going to give you that next number in the sequence. And essentially what this sequence does is it creates these ratios in price, especially when we're looking at the markets. And I'll show you this when we look at the Fibonacci tool. But essentially, this is what the Fibonacci sequence is. It shows up literally everywhere. If you don't believe me, you can watch tons of YouTube videos on where the Fibonacci sequence actually shows up. It's actually pretty interesting. So it's a nice little blueprint that you see literally everywhere. So I'm going to kill this annotation tool here, and let's just talk about how to use the Fibonacci tool and what it is. So if you want to take the middle scroll wheel of your mouse here just as a shortcut to kind of press that in and get to the drawing tools, or you could go to the drawing tools up there in the upper right hand corner. This will take you to an area where you have a ton of different Fibonacci tools here actually. But today we're going to work strictly with this one that is a percentage sign, and that is the Fibonacci retracements. And essentially what these do is you can draw them from lows to highs or highs to lows to basically forecast support and resistance levels. So traders will use these to place their entries, their stops, their profit targets. They'll even use it to add to their positions, or I guess also really peel back some of their positions. So we're going to go through and drawing a couple of these on a couple different stocks and talking about how we can place trades around them and some of the rules for this. But I do see a survey. It just popped up in the chat. So if you guys can take a minute to fill out that survey for me, please. I definitely read each and every one of your comments. So thank you so much to all of you who have provided all different types of feedback, constructive and positive. I love it all. So we use that in our upcoming webcast. So please take a minute, fill that out there. So let's just start with the S&P 500. I'm actually going to go through some levels of Fibonacci retracements that we've seen where we can actually see where over time price has found support and resistance. And for this one, I'm actually going to take it back to zoom out a little bit to the most recent bear market cycle that we actually saw here back in 2022. So one of the number one rules with the Fibonacci retracements is if you're going to look for levels of resistance to the upside, what you want to take is you want to start your drawing from a recent high to a recent low, and that's going to give you the resistance levels to the upside. Now, so that's in a downtrend. So if you have price in a downtrend, that's what you really want to do, is start the drawing at the highs to the lows. I'm going to show you that in just a second here. But if price is in an uptrend, you're going to start the drawing from the lows and project that to the highs to show areas of where we could see a support retest. So I'm actually going to show you how this plays out in the S&P 500. So I'm going to click that middle scroll wheel, click on my Fibonacci's tool, and I'll actually add this too. So something that makes it easier to use drawings on Thinkorswim is this nice little settings under charts. It actually pegs your drawings to the open, high, low, close, rather than just making it kind of hard to stick that to a particular candle. So in the chart settings, just make sure you snap your drawings to the open, high, low, close. I promise you it's going to make your drawings a lot easier to make, especially with trend lines, price levels, and especially with the Fibonacci retracements here. So what I'm going to do, since this is a downtrend from the 2022 highs, I'm going to take that all the way to the lows here and click that. It will kind of give you some areas of where we have seen levels of resistance actually play out over time. So I think the first thing that you're going to notice here is that when I look at the Fibonacci's, I only have 5 different levels here. So I have the 100% level, I have the 61.8% level, the 50% level, and the 38.2% level. Now, if you're using this drawing tool for the very first time, you may actually see a couple levels, a couple extra levels here in between the 100 and the 61.8, which is that 78.6% level. And you may see another level down here, which is the 23.6% level. So if you do see those, keep in mind, a lot of traders do actually hide those in the drawings because they show typically a very shallow level of a pullback or a very deep retracement with that 78.6%. So a lot of traders actually avoid those. So if you want to change, hide, or add Fibonacci levels, you can actually take this drawing and right click on it, edit the properties of it, and you can actually add different curves and type in those ratios. But for those of you that have that factory default of it showing those, I just wanted to make the kind of comparison to what traders typically use, how my drawing looks like on my S&P 500 chart versus what you're probably seeing on yours if you're using the Fibonacci tool for the first time. So you can hide those. You can see I've hidden this one there as well. So hopefully that helps a little bit. And you can obviously make these thicker, change the colors of the lines, all that type of thing right there on the Fibonacci's. Now, another thing I will mention too is that 50% retracement. Keep in mind the 50% retracement level is actually not a Fibonacci level, but we keep it there because it is important to traders, because it's psychologically significant actually, because it's that midpoint retracement of that entire move or entire move down or entire move up. So it isn't that true Fibonacci level, but traders will typically keep that one in there just because of the psychology behind it there and the psychology of prices, almost finding this like equilibrium level at 50%. So that's why we keep that in there. And so this is kind of what we're looking at where we draw those highs to lows here. It allows us to say, okay, if we cross above the 38.2% retracement, we'll likely go to the 50% retracement. And if we cross this percent retracement, we'll likely make it to the 100% retracement. But if we don't, we may see a retracement to another one of those levels before pushing higher. Now, if we're just looking really long term on the S&P 500, we actually saw really before this recent kind of tariff tantrum that we saw earlier this year, price actually reached the 200% retracement, which was basically taking this cup, the depth of this cup that we saw, or this bowl-shaped pattern, and projecting it upward. So a lot of times that is where traders at the 161.8% retracement level and at the 200% retracement level, that's really a popular area where we may see a lot of profit taking place when they go long with some of these trades with a breakout of resistance. And we actually saw that as early last year as July, before we had a bit of that correction there and we eventually moved above it. But then we saw more profit taking there at that 200% level. And what do you know, it retraced all the way back to that 100. And then most recently, it stalled out almost exactly at that 261.8 retracement level to the upside as well. So it actually just shows how these mathematical levels can really translate to markets and why traders will use these. Because initially, if we don't have an area to look back in, if the price is making new all-time highs again and again and again, we may not know where to place our profit targets to the upside, because we can't look back at a chart and look at an area of previous resistance where we may see that it may run up to where we could possibly take profits. That's why traders will use these Fibonacci retracements to really project those forward. And then if they're seeing almost like a type of reversal pattern really taking place, maybe it's a bearish reversal at a high, they're seeing that candlestick pattern or a follow through of that candlestick pattern, or seeing a break of the trend, they may actually look for that level of support where they could place their stop to exit this trade. So profit taking, stop orders, that's kind of why, again, why traders will use these as levels of support and resistance. So it's kind of neat how this really adds up here with the overall market. A little hint for you, if you do that with the NASDAQ composite, you'll actually see that similar level really taking shape there as far as where it's stalled out at those Fibonacci. So this is a max weekly chart in this case. So I'm just going to right click, remove drawing here, and let's just look at a couple different examples to really see how this can be put into place on the daily chart of what we're looking at. So let's take a look here. What are the examples I have? Okay. So let's look at a couple uptrends. I'm going to look at Micron. Micron has been in a strong uptrend for pretty much all this year. I mean, just look at the gain from lows to highs in this case. We had this recent break of this almost like ascending triangle pattern. And just today in the last trading day, we're seeing two possible pause or possible reversal candlesticks actually taking place right around this level, with those doji candles here, where that price of the open and the close is almost identical at that same level. So this could tell us that this is a possible place where we may see a little bit of reversal. So traders, especially since they saw a little bit of, not necessarily like a follow through today on the candle that we saw from Friday's session, seeing another doji candle, that may give them more of a reason to possibly take profits in this trade, or it would give them a reason to move up their stops to a certain level if they were long this entire time. So what I'm going to do is actually draw a couple levels here from lows to highs, because it's going to give us a couple levels of support where we could look at where traders may be looking to exit the trade that they're already in, or they may be looking to take a new trade if they don't truly see a break in trend. It may be a place where they could add to a position or add onto or enter a trade at a buy the dip opportunity. So let's take a look at this one here. So we're just going to take a recent swing low to a recent swing high. So let's activate that Fibonacci retracement tool there. Let's take that recent swing low at 221. And make that, reach that the high of today, which was 2186. And I'm going to zoom in here. Okay. So this is going to give us a couple different levels that we could look at in this case. So if we had a shallow retracement of this price, which a lot of times you do see a shallow retracement, but sometimes you see a very deep retracement, which is all the way to that 61.8% level. So what traders may do in this case, if they are already long in this trade, they may have their stop placed at 258 or so if price breaks below that 38.2% retracement. Now, another thing that traders may do is they may say, hey, if I missed this entire move up, and I see that price actually went to this 38.2% level and gave me a confirmed bounce off of that level, maybe one of our holds where we see a close above the low of, or I guess a close above the high of the low day, in this case, I guess so a bold. If we see that confirmed bounce of that 258 level, that is where it may give traders an indication to add on to this trade, because it just gives them a buy the dip opportunity within this overall uptrend in this case. So that's kind of like the short term there in that case. Now, if we're looking a little bit long term, I could even connect these lows to these highs here. And that would give me a little bit more of a area in the longer term. If I'm not just a day trader or swing trader, I may be looking at a longer term level here. And a lot of traders may find this reasonable because we've made a higher high, a higher low from that low. We've then made a higher high and a little bit of a lower low in that case, but then we went on to make another high. So we may say, okay, if this trend is still intact, we may see a higher low possibly being made right around that shallow retracement, right around 38.2%. So that, again, with a confirmed bounce, could give traders an indication to possibly enter into this trade. But price could give us a couple areas of support on the downside if it does continue to break through that level. So another area where we may have stops placed or possible re-entry of buyers only if we see that confirmed bounce from that level is 237 and then 226 there. Because let's remember, all of these are still going to be higher lows that we saw from the previous lows that we see here in the short-term trend. It's kind of interesting though that this 50% retracement actually occurs right at the high of this candle where we saw that gap above before. So that may give us even more of a valid reason that, hey, price may retrace a little bit below the 38, maybe take down that 20 period moving average and may retrace all the way to close that gap. We shall see. If it holds that gap and doesn't close it, it's going to give us that stronger indication that that price may actually move forward in that case. Now I got a question. Are we supposed to draw the Fibonacci retracement on the current phase, uptrend or downtrend, or the more recent phase? It's going to determine based on your time frame. So we can look at a longer term example, but it's strictly on your time frame, because if you are a shorter term trader and you're just looking to trade this kind of weekly move here, this is where you may have been looking at, was these lows to these highs. If you're looking for a little bit longer, that monthly trend, you could be looking at these lows to these highs in that case. And that's kind of more of a reason why technical analysis and using these Fibonacci retracements isn't a self-fulfilling prophecy, because not everyone's looking at the same time frame as you. Not everyone is looking at the same swing highs to swing lows. So just kind of keep that in mind as you are drawing these Fibonacci retracements. But let's look at another example where we saw really from yearly lows to highs where we can draw a potential retracement here. So if you're more of a longer term type of trader, and let's just say you got into this stock when it completed this base right here and broke out to the upside, or you bought it on a dip, whatever that may be, if you have held this for a long term in iron, what you could do as a longer term trader or as an investor, you could take these lows to these highs right here, those all-time highs that we saw, and you could actually look to see where price retraced to, which this would have given long-term investors an area when we saw this break out, or that kind of confirmed bounce from that 61.8% retracement. If we kind of saw that bounce, that may give investors another area to really buy the dip. Now, I will say this, it is typical to see, if you did see a very strong trend to the upside, it is very typical to see a very deep retracement of that move. So it's not really surprising that we saw a very, very deep retracement to the 61.8% level. But I will tell you this, if it would have broken below that 61.8% retracement level, that's an indication that there is a break in the primary trend in this case. So with that case, it still held that primary trend because it did have that confirmed bounce of that 61.8% retracement, and it even gapped above that 50% retracement here. I'm going to zoom in a little bit further so you guys can see this. So it gapped above that 50% retracement, kind of stalled out a little bit there right above it, and now is fiddling with that level as well as the 20 period moving average in this case. So this may be an area where traders may kind of wait to see a confirmed move really above that indicator, but also a confirmed bounce from this level, since we did see a bit of a retest from that today before actually entering into a trade. Let me check the chat here to see if we have any other questions here. Okay. Can you draw support and resistance and key levels and what are points of interest and what is manipulation? Okay, so I hear this word manipulation a lot from retail traders and markets. And essentially, it shows up to retail traders as manipulation because sometimes you see with these levels, you see that price will actually retrace a little bit below that level and then bounce back up to the previous level, kind of like what you saw here. So I'm going to zoom into here. We saw this break of that 50% retracement, which probably likely would have triggered a lot of stops, but then price just bounced back up to that 38.2 retracement within days. So folks could say, and we even had a bit of a break there and then a reverse back down and a break there and a reverse. So you can say those levels from a retail trading standpoint, if you have your stops in at those levels, it may show up as this quote unquote manipulation. It's really not. It's really, there is a lot of traders that look at these levels and are placing stop orders or entry orders in those cases to really, I mean, you never know if someone's trading this range. You never know if they're trading this down move and this swing back up. Like I said, you can place these Fibonacci retracements on any of these swing highs and lows. So that's where, like, when you get stopped out at some of these levels, and you think, okay, price is going to move to the downside, then you see this whip back up. It's not necessarily manipulation. It's that traders, I mean, portfolio managers, traders, market makers, they are using these levels of support and resistance because they know that they're going to be psychological levels. They know that a lot of stops are going to be at that level because they know that traders will pay attention to these things. So if you would like, even, I know a lot of traders, like if they see a round number in this case, instead of putting their stop right at 41, they may put their stop a little bit below it, maybe even at like 40 or 39 or something like that, to put it a little bit below the level so you're not getting whipsawed out of that trade. So hopefully that makes sense. In as far as your question on manipulation, it's really just a story of support and resistance, and where we can kind of look at these levels and any technician can say, okay, this may be a level that traders will place stops. This may be an area where we may see some profit taking. So that's kind of where we see price going above or beyond those certain levels, which again is why we call those zones, not a one particular resistance level or support level. We look at a zone because we know that there's bubbles of liquidity within those levels. So hopefully that makes sense there. So as far as a possible trade to take, now I'm just going to take this trade as an example trade for what traders may do. Keep in mind, they may look for an additional bounce here today. I'm going to count this just for today's webcast as a bounce because we did see a dip below this, this support, but then we had a bounce back up. We tried and tested that 20-day. So I'm going to take, in this case, a bullish trade, maybe targeting this area towards 49 or so in this case. So what I'm going to look at is, I'm just going to look at over the next couple months or so, I'm expecting IREN to really bounce from this level. I know it's been higher or lower highs, lower lows, but in this case, we may be seeing a little bit of repair. So this may be an example to buy another dip, add on to this trade to possibly see some recovery from here. So just as an example to show you how traders may trade these levels, I'm going to go to the trade tab here. I'm going to look at the 20th of March, look at a couple months out from expiration, because I may want to actually see just kind of give us a little bit of time here in this option. And I may look to take a risk-defined directional trade here. And instead of buying a call, I may be just looking to buy a spread in this case. So maybe looking to buy the lower strike, sell the higher strike for a bull call spread. So I'm just going to look at this option that's a little bit in the money with this 40 strike here. And I'm going to look at this 775 here. And I'm going to couple it with this 45 strike out here, right around a delta of 50 here. So I'm going to sell the 45 strike there. So since we did see that move in our chart, that resistance really placing it right around, I think it was like 48 or so that we saw, we could possibly see a move above that level. So that's why we're going to take this directional trade here in this case. The most we can take, since it's a 5 wide spread here, the difference between 45 and 40 minus what we're paying, which is our max loss, we can see our max profit is going to be that 290 to the upside in this case. So that is if price actually moves, where we break even actually if we take that long strike plus our debit. That's going to give us that level where we actually break even on this trade. So we really only need a little bit of a directional move. But if it moves above 45, that's where we're going to kind of see our max profit in this case with this vertical spread here. So I'm going to confirm and send this trade. Make sure I place it in the getting started with technical analysis one here. Okay, so that was an example of how we trade these possible levels. Again, a lot of traders will wait for confirmation here. Let me move this thing out of the way here so I can get to the charts. Okay, there we go. So now we're going to take another example here. I'm going to look at where we could see a possible retracement to. So this is actually a trade that we're kind of taking it in the opposite direction in this case, because today we're seeing a little bit of a hanging man, possible reversal candlestick really playing out in this trade for, I guess in this stock, Pan American Silver, which is actually one of I guess one of those stocks that we place in another webcast, an example webcast there. But this may be one of those that may take a little bit of a breather just with the run in silver overall and in this stock overall. We've seen just over the last few months quite a run to the upside. So we may be looking at a couple levels for this stock to be taking a breather, and especially if we see a follow-through day tomorrow after this possible hanging man reversal candlestick that occurs at highs there, where we see that body of the candle getting really close to the highs of the day in that case. So if we're going to look at support areas to the downside, we're going to activate our Fibonacci retracement level, and we're going to take it from a low to a high, because that's really going to show us possible levels where we could see a level of stops being placed. We could possibly see new market participants enter the trade and buy a dip. So let's take a look at that. So I'm going to let's just take the December lows to the recent highs in this case. Okay. So I just took those recent swing lows to the highs. This was also almost like a flag pattern that we saw here, or a pennant pattern breakout that we saw, really taking the lows of those actually as well. So if we look for those recent swing lows to swing highs, we see today that possible reversal candlestick really taking shape. So this is giving us a few different levels. I'm going to stretch out the chart here. Okay. So if I stretch out this chart, I can see just a shallow retracement would be to the 38.2% retracement level. So if we end up filling this gap, which that's obviously going to be the first logical level of support, which is this gap that we saw, almost like a breakaway gap in that sense, where it broke above prior resistance that we saw right around that $40 or $52 zone there. We saw a couple highs being made. We saw that gap above it. So that's going to be that first short-term gap. If we see that fill of that gap within the next couple days, that tells us that that's an exhaustion gap and the trend is exhausted at this point, where we may see a little bit of a drawdown. So the first level that a trader is going to look at to possibly have, if they rode this entire wave, they may have an exit right at $50 or so. So right at $50, maybe one level that traders may take profits or may stop out their losses there in that case to really capitalize on what they've made in this move so far. But if we do see a confirmed bounce from this, it may give us an indication that, hey, this is a really good area to possibly buy the dip if I am a Fibonacci retracement trader here to find this level of support. I do find it interesting though that we have our 20-period moving average actually all the way back down here at the 61.8% retracement. So I kind of perk my ears up and open up my eyes a little bit more, bring my looking glass when I do see a level of confluence where we see something that's been so extended from its moving average. If I just kind of take this level to where it is now, it's 14% above it, so it is pretty extended above that moving average. But if I'm looking for something where I may see a deep retracement of that level, that may be one of those areas that I may be looking at for a level of support, or that area, if it holds, as a true retest to re-enter in that trade at a lower by the dip opportunity if we saw those breaks through the first couple Fibonacci levels there. So a couple things to keep in mind. Now, what I may do as a trader in this case, if I really do want to own this stock and I may want to use options as a strategy in this case or enter into this trade, what I may do is place a limit order if I see, or I guess I may place a limit order in this case if I do see a possible bounce from this level. Or what I may do is consider selling a put at this level if I want to own the shares right around 50 and get paid to do that. Or I may sell a bull put spread right around that level. So a couple different ideas of trades you could do with these Fibonacci support and resistance levels. Today we're going to just look at selling a put at that near term support, because that may be a level where if it holds, we're going to enter into that trade. We may want to get paid to do that as well. So I'm going to look at the trade tab in this case. I'm going to look at, let's just take a look. Let's look at the 23rd of January. It's about 30 days till expiration. That's kind of where we see that time decay tend to kick into high gear with options. Now, we have a ton of different courses on these different option strategies. I know we did a vertical spread on that last one. We do have classes on vertical spreads. We're going to do a cash secured put on this one, and we do have webcasts on covered calls and cash secured puts. So check those out in that case. But if we want to take advantage of some of the time decay in this option where it kind of kicks into that high gear, we can see the theta at about 4 cents per day possibly getting shed off of this option. We're okay with owning the stock at $50. We may want to get paid to do that. So it's going to bring us in about $140 in this case if we sold this option, really putting our essential entry for this price of this stock really at $48.60, because it's going to lower effectively our purchase price for the stock since we collected that premium to do so. So we may take that selling of a put there right at the 50 strike put, going to place that order, good for the day in this case, or I'm going to try for the midpoint in this case, 145. I'm going to place this trade and in the getting started with technical analysis. Now let's just talk about the max profit, max loss. The most we can make in this trade is a premium that we are capturing. So if we are capturing the premium of about $1.45, that translates to $145. Now, a couple things. If the price of the stock stays above the 50 strike before expiration, we keep the premium, we don't end up with a stock position. If the price of the option goes below our strike price, below $50 prior to expiration, that is where we may be at risk of assignment, which means we would be obligated to buy the shares, 100 shares of this stock right at the $50 level. But again, theoretically, we're buying it a little bit lower because we collected that premium to do so. Now, the risk of this trade is going to be if the price of the stock goes way below our strike price before expiration, which is then where we may be in a bit of a loss to the downside, because essentially this stock could go to zero. So that's why you're seeing that downside max loss here on this trade. One more thing before we hit send, I had a question on liquidity. Let's take a look at liquidity. Really just take a look at the width of the spread in this case. It's going to matter more than the amount of contracts that we're seeing there. And we are safe. The two measures of liquidity we look at is a volume, open interest. But the main thing that we look at that'll tell you about the liquidity in this option is going to be that spread. And that spread is going to be right around that 10% of that option price. You just take that difference between 140, 155 in that case, divided by that 155. That's still going to put us in range of a good level of liquidity in that case. So I am going to hit send. Everything looks okay in this case. And another thing that someone mentioned in the chat, great to comment there, great call out there with that delta. So a lot of times when we are selling options in this case, I know today we're purely looking on a technical basis, looking at that Fibonacci retracement level right at 50. But a lot of traders, when they're selling options, they may look at a smaller delta because that's going to tell us how much our option is going to move based on a $1 move in the stock price. It's also going to tell us that possible probability of that option expiring in the money. So in this case, it's going to give us that much smaller probability of that option expiring in the money, which is probably what we would want. But we are looking to scale into this stock at $50 if it goes below that. But if not, it gives us a little bit of cha-ching. It gives us a little bit of premium that we can capture, and then we can kind of keep in mind where the price of the stock goes to possibly buy that dip or buy that bounce. So those are a couple different ways that traders can use these Fibonacci's for support and resistance. They can use them for building these different types of trades, really, in a sense, for forecasting, whether you want to be more directional, whether you want to be more neutral, and really identifying these levels on the chart that you may not necessarily see just in the price of this. So let me look at a couple other questions in the chat before we sign off today. Okay, question from Nidhi on the volume is number of transaction or the number of shares. Well, you have volume on the stock, you have volume on the option. Volume on the stock is going to be the number of shares traded. Volume of the option is going to be the number of contracts traded. Open interest is the open number of contracts. So that's only going to increase if we see a new options trader that's opening a position meet with another new option position trader opening a new position. That's the only time that you'll see that increase. So thank you so much, everyone, for just your patience and questions, engagement throughout today's chat. I know Fibonacci's can get a little intense, but it is a very interesting and helpful tool within markets when you are trading to really forecast those support and resistance and craft your trading strategy around them. I want to give a super shout out to Cameron May in the chat. He stayed really busy. Please look at that survey link to put in some notes today. Please like this video if you found it helpful. It's going to help a lot of other traders find this video as well if you do give it a thumbs up. I know a lot of people are trying to learn about Fibonacci retracements and really how to craft different strategies, entries and exits around those levels. And please subscribe to us on Trader Talk Schwab Coaching on YouTube. And I hope everyone has a very Merry Christmas, very happy holidays, whatever you tend to celebrate here in the next coming days, and Happy New Year as well. Take care, traders.